Welcome to the live economic and financial markets commentary. This live session will cover fundamental analysis in the week ahead, global coverage of current economic data including major markets news, analysis and events, how to apply the best trading strategies prior to news being released and after. First, I'd like to start the session by giving you some information about me. My name is Ihab Jubil. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities. And in recent years, I have also set up my own trading robots, signals, and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now let's start the session. Another week in the forex markets and euro falls broadly as Greek default looms. The schedule for the week is packed with indicator releases from all corners of the globe. The biggest economic indicator in the forex market will be released a day earlier than usual to the account for the 4th of July holiday in the US. The non-farm payroll or NFP will be published on Thursday, July 2nd at 2:30 p.m. GMT time. The eyes of the market will shift from Europe to US employment indicators that lead off with the ADP private payroll number, building towards the non-farm payroll, and the unemployment claims on Thursday. Global manufacturing and trade will be highlights, as purchasing managers indexes or PMI will be announced in China, the UK, and the US. Euro opens the week sharply lower, together with stock markets after Greece failed to strike a deal with its European lenders to secure more credit ahead of a looming deadline to repay a key International Monetary Fund loan, raising the risk that it may default and leave the Eurozone. Greek Prime Minister called for a referendum on July 1st over the weekend to decide whether to accept the bailout package by the international creditors. The euro fell nearly 2 US cents to around $1.0985 in early Asia Pacific, from around $1.1165 late on Friday, as Greece announced capital controls on its banks after the European Central Bank froze the level of funding available to them. Against the Swiss franc, the euro fell to 1.0251 francs, its weakest level since late April, as investors piled into the Swiss currency, which often appreciate during times of uncertainty. Euro yen also dipped to as low as 133.77. Euro pound took out this year low of 0.703 and reached as low as 0.6985 and continues to press 0.700. Yen is the biggest winner so far on risk aversion. Dollar yen dived to as low as 122.09. US failure to repay a crucial debt to the IMF expiring on Tuesday would pave the way to a possible exit from the Eurozone, which many investors fear may fatally weaken the currency. Once the situation between Greece and Europe has gained some clarity, market participants will once again return to looking at fundamentals. Global manufacturing data was mixed and China continues to worry investors with its slowdown. European manufacturing PMI posted a 52.2 flash reading, beating expectations of 52. The above 50 reading means the industry is expanding, and that's welcome news to the European Central Bank. The ECB can take some of the credit for that improvement from its quantitative easing program. The manufacturing and services PMIs were disappointments for the United Kingdom last month. Manufacturing narrowly missed expectations at 52 with a forecast of 52.7, but the services PMI came at 56.5, well below the expected 59.2. Domestic demand is seen as being the main driver for both manufacturing and services as exports continue to fall behind. Overall, manufacturing, services, and construction conditions continue to point to a strong pace of recovery for the economy of the UK. But the lack of lift-off from Europe will continue to hurt British exports. We will watch this PMI even this week. Wednesday, 1 a.m. China manufacturing PMI 145. China HSBC final manufacturing PMI 8:30 a.m. UK manufacturing PMI 2 p.m. USD ISM manufacturing PMI. Thursday, 2nd of July at 8:30 a.m. British construction PMI. Friday, 3rd July, 8:30 a.m. British services PMI. And all times GMT. I will talk in more details about some of this news. UK manufacturing PMI will be released on July 1st at 8:30 a.m. GMT time. The UK manufacturing PMI is a survey of purchasing managers in the manufacturing sector on various economic activities, including inventory, employment, orders, and so on. Higher than 50 reading means expansion, or less than 50 reading means contraction. UK manufacturing PMI is usually a high impact, very tradable release out of UK. In the event we get our tradable deviation, we should plenty of market price action, especially if the release matches the current pound bullish trend. UK manufacturing PMI forecast as 52.6 and previous was 52. Our trade plan will be as we will look for a tradable deviation. The deviation is the difference between the forecast figure and the actual release figure. So we will look for the deviation of 2. Since this is a leading indicator and its impact may hint the future trend of other economic indicators, as such as inventory, employment, retail sales, the market usually reacts to this release with volatility if we get our deviation. We'll be looking to buy pound if we get 54.6 or higher, or looking to sell pound if we get 50.6 or worse. This is a 1-minute chart for last month during and after the news release. Now with the US ISM manufacturing PMI. It's a leading indicator, and since this week's non-farm payroll is scheduled on Thursday and we will not get the non-manufacturing PMI before the release, we should see plenty of market reaction if we were to get a surprise release. US ISM manufacturing PMI forecast 53.2. Previous was 52.8. Our trade plan. We will be looking for around 2 points of variation for this trade. If a 51.2 or worse number is released, we would see some US dollar weakness. Therefore, sell US dollar. If the opposite is true, or 55.2 figure is released, expect to see stronger dollar in the short term. Therefore, we should buy the dollar. If our tradable release are reached, there is a good expectation of 50 pips of market movement within the next 50 or 60 minutes on the US dollar. And this is a 1-minute chart for last month during and after the news release. Now, with the US employment events to watch this week. Wednesday, July 1st at 12:15 p.m. ADP non-farm employment change. Thursday, 2nd of July at 12:30 p.m. non-farm employment change and unemployment rate. The US ADP non-farm payroll employment change will be released on July 1st at 12:15 p.m. GMT time. The US ADP non-farm payroll employment change is usually a decent predictor for Thursday's non-farm payroll report. And with the Federal keeping a dovish stance during the last trade decision, if we were to get a strong upward surprise, we could see traders speculate a sooner than expected rate hike schedule. The US ADP non-farm payroll change forecast is 216,000 and previous was 201,000. Our trade plan, if that variation of 50,000 is actually hit, the market probably will not have a problem pushing it. And this will change market perception for the non-farm payroll release. Therefore, it's best to be around your computer during the release. We will be looking for a deviation of 50,000. So if we get 266,000 or better release, I would be looking to buy. If we get 166,000 or worse, then I would be looking to sell the US dollar. And this is a 1-minute chart for the last month during and after the news release. US non-farm payroll employment will be released on July 2nd at 12:30 p.m. GMT time. US non-farm payroll is expected to be around 231,000, and with the federals already keeping a dovish tone, and the fact that this release is scheduled on Thursday due to July 4th Independence Day holiday, which means lower liquidity due to a long weekend. I would recommend to stay out of the market unless we get our tradable deviation. The US non-farm employment forecast 231,000 and it was previously last month 280,000. And the US unemployment rate forecast 5.4%. Last month it was 5.5%. Our trade plan. Non-farm payroll employment change release is forecasted at 231,000. The unemployment rate is expected to be at 5.4%. If we get a significantly lower release on the non-farm payroll, 161,000 or worse, and slightly higher unemployment rate, 5.4% or more, I would be looking to sell the US dollar against stronger currencies. As speculation for federals to further delay the timing for the first rate hike. On the other hand, if we get a strong non-farm payroll release, 301,000 or better, and the unemployment rate falls or remain at 5.4%, dollar could strengthen, and I would buy dollar against other weaker currencies. If we get a conflicting release, then we will wait and see how the market reacts first. If there is an overwhelming sentiment driving the market, we will get plenty of opportunities for an entry. If we just wait for 5 minutes after the release, we will get a much clearer view. So, non-farm payroll trading strategy will be like that. Let's talk about how to trade this release. We will wait for the numbers to come out, but continue to hold on a trade. Even if we get our tradable figure, 300,000 to 160,000, wait for a possible revision of the previous release number of 280,000. And the market usually overreacts with the revision, and the chances favor that a solid trade will present itself if we don't get a conflicting releases between the revision and the actual release. At this point, still stay out of the market. Then, the next step is to wait for the unemployment rate, which is expected to be at 5.4%. If the unemployment rate were to surprise higher, we will have to make a decision based on the market sentiment coming into this release. Of course, if the unemployment rate were to fall below 5%, then we should see a surge in the dollar as traders speculate Federal accelerate rate hiking process. After all of the numbers have been released, wait for the market to push and wait patiently for a decent retracement before getting in. Look for recent support and resistance areas for entry, as a high impact news with various components are extremely volatile. And those who are patient will always get a chance to enter with a much better entry. And this is a 1-minute chart for last month during and after the news release. Another high impact news for this week, Australian retail sales. It will be released on 3rd of July at 1:30 am GMT time. Retail sales measures the value of sales at the retail level. A rising trend has a positive effect on the nation's currency because retail sales make up a large portion of consumer spending, which is a major driver of the economy and has a sizable impact on the GDP. Traders pay close attention to retail sales because it's usually the first significant indicator of the month that relates to consumer behavior, and we may see surprises. Australian retail sales release is usually a highly tradable report out of Australia, but with non-farm payroll being released earlier and the fact that liquidity may have been thinner, I'd recommend a trader only if we get our tradable deviation. The forecast for this news is 0.5%, previous was 0%, and you will weight deviation of 0.5%. So we'll buy Australian dollar at 1% and sell at 0%. The trade plan will be the deviation that we are looking for. The Australian retail sales release is for a minimum of 0.5%. If we get 1% or better, we will look to buy, and if we get 0% or worse, we would look to sell. There is a high probability of market movements of over 50 pips in the next 2 hours if we get our deviation. We will be looking for an after news retracement to enter the market. So wait for the deviation, wait for the market to move with momentum first, and wait for a decent retracement. Then you can enter the market. And this is a 1-minute chart for last month during and after the news release. Now with a good trading strategy, pre-news trading. In pre-news trading, we enter the market 5 minutes before the news release. We base our entry on market sentiment and fundamental trend of the currency pair. We will always trade the direction of the technical trend. This type of news trade is highly advanced. It requires that you understand the market trend and market sentiment. So it's not recommended for all news events, only selected few. Remember, fundamental sentiment trading is a type of trading method based on fundamental news sentiments. As the forex market is highly speculative, strong high-impact news releases are likely to move the market prior to their scheduled release. What sentiment trading is? Focus on high-impact trend-changing events, 100% pre-news, so enter and exit before release, based on long-term trend and strong short-term pace. Now with some basic rules. Enter at least 2 hours to 12 hours before the release. Close the trade no later than 5 minutes before the release. And follow the pre-news sentiment. With pre-news trading, market perception is everything. If the market is expecting a news event to shift sentiment, we may see a more exaggerated move before the actual release. How to determine pre-news sentiment? From PPI to CPI. A high PPI will affect market sentiment towards a better CPI release. The same with retail sales and GDP. Retail sales is emerging countries such as the US makes up about 2/3 of the market. If retail sales is good, then possibly we will see better GDP. Unemployment, jobless claims, unemployment rate, consumer confidence also with retail sales. If people are losing jobs, they will not have money to spend at the retail sales, therefore affecting the GDP as a whole. The same with housing data and the durable goods, especially in the US. The same with ADP and non-farm payroll. US ADP has an impact on the expectation of non-farm payroll. Challenger's job cuts report could affect unemployment rate. Remember also purchasing manager index such as UK manufacturing PMI, US's ISM manufacturing PMI, Canada PMI also have an effect on the future GDP and the health of the economy and the employment component. I'd like to thank you for attending today's webinar. We will hold the following webinar next Monday. So please stay posted on my webpage sandpioneer.com and hope to see you on my next webinar. Goodbye and see you next time.